And ultimately, it was rather interesting because neither of us really cared. We were not necessarily rushing for me to take it over, for him to sell it. Both of us were just almost too polite in regards to, well, I want you to save taxes. Well, I don't want you to pay too much. Well, I want this and I want that. And it actually, frankly, hurt us more than helped us. And so now the question is, okay, we've made it here. Let's pump the brakes ever so slightly. Let's get back to that foundation, those fundamentals, and make sure we're ready for that kind of next step, whether that's acquisition, multiple acquisitions, where there's just natural growth.
How do you strike the balance between the professional and the family relationships, especially when your employees are watching? How do you set a valuation on a business that you were instrumental in building? And how do you transform a traditional service business and position it to scale for the next phase? My name is Barrett Young, and this is the Art of Succession podcast. My guest today is Mike Libbey, partner and chief operating officer of YBL, an accounting firm in Ontario, Canada. Today, we're going to hear from Mike about starting with his dad's accounting company while working through college, then gaining experience in the workforce before joining up with his dad's firm and starting the transition of leadership. Mike, welcome to the Art of Succession.
Thanks for having me, Barrett. Appreciate that. Looking forward to it.
So give me a little bit of context. I know you're working at YBL, formerly Your Bottom Line. Your dad started this company originally?
Yeah, he absolutely did. He started it actually 20 years ago. So depending on when you're watching this, he started it 20 years ago in May of 2024. That'll be officially 20 years. And okay. I joined on board in 2010. So I've been with the team for about 14 years, and it's been exciting. I mean, he had a few opportunities that he was thinking about creating YBL that just kind of fizzled out in different other opportunities. But this was really the one that kind of stuck, and I'm glad it did.
Okay. Where was he in his career when he started this?
So he had been, he'd worked for Touche and Ross, as he calls it back then. He's a CPA, and so now known as Deloitte. So he worked there. He was controller. He was CFO for a couple other kind of larger corporations. And then, roughly 20 years ago, in 2004, he determined that he wanted to kind of start something up his own. And so he was doing it at night, on weekends, all that fun stuff, as he was a full-time controller. I can't remember the exact name of where it was. I think it was Earthfresh in Mississauga near Toronto. So it was a side gig, kind of nighttime, weekends. A lot of people start out doing kind of simple personal tax returns, corporate tax returns and such. Had a partner. He had a partner at that time originally.
Okay.
And that kind of fizzled out as well, which kind of worked out all right. And he would say that too. And so it kind of just really grew from there. And so ultimately, after a few years, he was able to make it a full-time gig. And then I joined on board in 2010 as the first employee officially.
Oh, okay. So he was a sole proprietor then still at that point.
He was absolutely. He had a couple other kind of minimal subcontractors he'd used from a bookkeeping perspective, or, hey, I'm overloaded from a personal tax perspective, but I was really the first one full time that joined on board with him. And it's rather interesting. Neither of us actually planned on this really happening and transpiring, but both extremely fortunate and happy that it did turn out this way.
Okay. And for context, roughly how big are you guys now?
So
15 years later.
Yeah, as of today, we're a team of about 30, looking for some kind of rapid expansion as well, some potential acquisitions on the radar too. But we're hoping to be, I would say, a team of 50, ideally within the next year or 2 years.
Okay, interesting. So 2010, it's your dad. The other partner had already exited at that point. It's your dad, and you came in as the first employee. You were in high school at the time?
So what had happened was, so I was in high school, and then what had ended up happening was I went to Niagara College and got my business admin accounting diploma there. So that was about 3 years. So I went there 2007. And so what had ended up happening was I moved back home to Curtis at that time, which is about 40 minutes east of Toronto. And so after college, I was looking for a different spot to work. Do I go to the Big Four? Do I do this? Do I do that? Having a whole bunch of interviews at different places. And during that time, and even during high school and college, I would come home for summers and I'd help them just a little bit, prepare a couple tax returns, nothing crazy, nothing expected to come out of it. And so I've been preparing minimal personal tax returns for quite some time. And what ended up happening was, of course, I put that on my resume, understandably. And so I'd go to all of these interviews, and they would all say, I see that you've worked for your dad a little bit. You got to fill in these blanks for us. Why are you not working for your dad's firm? And I didn't actually have an answer. And so if you looked at us in high school and even elementary school at that point, there was just no world we were ever working together. And it doesn't make sense with hindsight now that, of course, I didn't go to college or university for accounting to try and work with my dad. And it just naturally kind of worked out that way. In fact, I went to college for accounting because I thought it was easy. And boy, was I wrong. And so what ended up happening was, even during going to college for those 3 years, I really had absolutely no intention of working for him. And sure, I knew he had this kind of side gig where he had this business and stuff, but it really didn't mean much to me at that time. Still pretty young. And so they'd ask me that question, and I really didn't have a reason. And so what ended up happening was, after one distinct interview, I remember, I think it was the third round of interviews at this company, I went home and I said, I don't have an answer. And these people keep asking me why I'm not working for my dad. And we just kind of discussed it. It was a Friday afternoon. We talked all weekend about it. And I started with him Monday morning. And so it's the rest is history, obviously, but it's just the way that it unfolded. It's difficult to comprehend, even for me and him, the fact that this wasn't necessarily planned, because in his mind, in my mind as well, I'd go out there, I'd get some experience, see what was out there, determine kind of what made sense and what worked for me. And even at that time, I really didn't have any thoughts or foresights about, hey, you know what, I want to do that and I want to come back and work for him. So the way that unfolded kind of naturally worked out rather well. And so we hit the ground running. And I mean, I started doing kind of minimal things with him, bookkeeping, paper, pen, all that fun stuff, old school QuickBooks Desktop, which is no longer a thing for us certainly anymore. Then personal tax prep, then naturally corporate tax prep. I helped him with the systems and operations kind of extensively because he really didn't have much of a structure to it. And that's kind of the operations piece there. I mean, I love technology personally and professionally, so it really just kind of naturally helped. And then so it was just me and him for quite some time. I'd say about maybe 6 years with some other kind of contractors out there. We had a couple people we'd hired and didn't necessarily kind of work out. And then we had one real good admin about kind of 7 years in. Then we finally got out of his living room and my parents' living room at that time, because it was really just out of his house. Moved into the office when we had 2 official employees, and then the fishbowl effect just happened. We filled that out, and then we moved into the office beside us, expanded, filled that out, and then moved once more to a larger office, about 15 minutes down the road. And now, interestingly enough, we don't use much of that space because we've gone kind of primarily virtual. So it's gone very well.
So 7 years in, you hired an admin. That's 7 years into you joining him in 2010?
Correct. Yeah, exactly. Okay. Yeah. So we had some other kind of people ad hoc and stuff, but I was really doing the bookkeeping, the taxes, the admin, the operations, you name it, kind of all of the above at that time until we made that leap.
I gotcha. Okay. So when you joined him, there was no real talk of there wasn't really a business here that needed a succession plan. And that's kind of what you had in the back of your mind is, I'm going to go out there and work there, besides, maybe not necessarily come home and work on dad's side business or dad's little small thing that he's got going on. Is that what was running through your mind?
Pretty much. I mean, even still, I got to admit, there was no grand master plan for me. Him, if you ask him, absolutely was a grand master plan. He's thrilled that I joined him in the way that this is all transpired, right? But it's always that fine balance. I mean, I've got 2 little ones. As much as I'd love for them to be my succession plan at some point, you can't force it on them, right? It's got to end up kind of unfolding naturally. I'm of that belief anyways. You push it too hard and it doesn't necessarily work. So I think it worked out fantastically. I mean, he asked my little man, he wants to be an astronaut. He's 5 years old. There was one time he said he wanted to be an accountant. I'm like, careful what you wish for.
You hold on to that little glimmer of hope. You told me 5 years ago you wanted to do this. What happened?
He's 5 years old, so we've got time to make that happen. But no, I mean, I'm sure it was really a grandmaster plan for him. And again, we're both very thankful with how it unfolded. But for me, really naively, I was, 20 years old at that time, really didn't have the foresight to be able to say, hey, I absolutely want to try and take over this business, do this, do that. Because in my mind, I mean, I've unlocked so much more in the last kind of few years as we've really kind of grown and scaled. But it still was, even when I joined on board, it was just, call it, we were making $100,000, maybe $200,000 a year, just doing personal taxes, corporate taxes, very simple stuff, no real advisory and stuff like that. So it was difficult to see at that time, being young and having such kind of, I'll say, minimal revenue, to think of where we'd be today and where we're about to be. So it all kind of naturally unfolded, which worked.
I got that. Okay. Did I read that you actually went into a different area of accounting for a little bit there before coming on board with your dad?
So when I went to school in Niagara, so in college in Niagara, I'd come back for the summers and I would work at the Ministry of Finance in Oshawa. And so that was, how do I say, rather simple and straightforward. They'd keep asking me back. It was easy. I've never watched more TV shows and and movies than I did at the Ministry of Finance, because I would beg and beg for more work, right? They just give you work. Here's this Excel work or something like that. And this is your work for the week. And I bang it out in about an hour, and I'd say, okay, I'm ready for more. I'm ready for more. And they're like, we don't have any more. Just don't do anything. Just don't tell anybody. I'm like, but this is boring. I want to do something more. So that's when I got into Breaking Bad, got into a whole bunch of other shows and stuff like that at that time. But time not necessarily well spent, but you know what? It allowed me the time to be able to kind of focus on some other things, personally and professionally, which kind of worked out well. But yeah, so we worked at the Ministry of Finance for 3 summers. They kept asking for me back, shockingly. And then after I was done college and before I went into university, that's when I kind of really linked up with Ross, as I call him, from a professional setting, but my dad, and then I went back to university as well and stuff. So,
gotcha. Okay, so that was more like a summer internship kind of. Gotcha.
Yep, absolutely.
But it was enough for you to know that was not the future for you.
Completely. Nothing against government workers at all, but I'd never had so much downtime in my life, and rarely in my life now do I see downtime, personally or professionally for that matter.
Drive you crazy.
Yeah. I wouldn't even know what to do with it.
So, okay. So I did hear you did go to school for accountancy, but you go to your website, and I talked to you just a little bit before recording. You're not a CPA or a CA in Canada right now, correct?
That is absolutely correct. So the way that it kind of unfolded, so I went 3 years for business admin accounting. I went back to school after about 5 years with Ross for my BBA, and that was online university that I did before I had kids. And so then I determined, you know what, do I want to roll this into my CPA? What do I want to do? And so ultimately, I was weighing the pros and cons, and I sometimes still do, about, is it necessary? Do I need it? What is it potentially going to unlock for me? And is it worth the time, sanity, effort, cost, etc.? And so I realized quite quickly that I didn't necessarily want to turn this firm into what some would consider to be the traditional model from a partner perspective, where I've got my chunk of clients and work, you've got yours, and I'm doing the top level reviews. That was never something that interested me. And while I do have the technical experience from bookkeeping to personal taxes, corporate taxes, sales tax, payroll, etc., and jack of all trades, master of none, it just didn't excite me to think of it in that way. And so that had really kind of moved us to change the org structure a little bit more in regards to kind of CEO, COO, those types of kind of org structure situations, where now we've got final reviewers under us. And so it's just not really been necessary for anything that we do currently. I mean, we don't do audits or anything like that would require it. The most we do is really compilation engagements. And so it just had not really mattered to me, quite frankly, the way that we've really kind of structured this. And so from a financial and optics perspective, really didn't seem worth it. I'd rather spend my time working on the business or in the business at whatever stage than spending that time kind of getting my CPA to really not benefit me. And the reality is, depending on how you position yourself, and I know with our firm specifically, 1 out of every 400 clients asked if we are a CPA, have a CPA, and the answer is absolutely we have CPAs on staff. I'm just not one, and that's not a big deal because I'm not the one reviewing your tax return anyways. So hadn't really mattered.
Gotcha. Okay. But at this point in the timeline, just trying to get this clear.
Yep.
at this point, when you decided not to go towards that or finish your BBA, it was still you and your dad and subcontractors.
Yep.
So it was kind of like aspirational. We're going to have CPA employees in the future that are going to be able to do this stuff. But
so
you made that decision then and decided to implement it.
So admittedly, so I went 3 years of college, I think a 3-year gap, and then 3 years of online university. And then at that time, you're right, that really kind of lines up with when we hired our first employee, about 6 years, which had been right when I was done kind of university. I was humming and hawing at that point. So I was, do I get my CPA? Do I not? And then work got so busy that it really kind of fell off my radar. So it's not like after university was done, I made the determination or the decision that I didn't want to get my CPA. It was really more so, I'm so busy, I can't even entertain this for the next 5-6 years. And here we are 11 years after that, where yes.
Life kind of makes that decision for you a little bit.
Sure. Could I get it now? Sure. Would any of my credits transfer? Maybe, probably not. I'm not even going to find out because that's just not the way I want to run the business, right?
I gotcha. Yeah. Okay. So at the time, but dad was doing all the necessary work that, it was still his name in the brand that was selling that.
Absolutely.
You're just like, I'm going to focus on systems or marketing or operations or whatever it was.
Yep. Exactly. Whether it's bookkeeping, tax prep, corporate tax prep, he was always the one kind of doing the final reviews on that from a CPA standpoint, CPA level. So yeah, it didn't seem vital at that time. And so, yeah, no, it worked out all right.
So in Maryland, we have a requirement that it needs to be majority owned by CPAs in order to be a CPA firm. Other states, there can't be any non-CPA ownership at all. Or did you guys just decide we're not going to be registered as a CPA firm? Is that you guys are an accounting company?
Yeah. So we do actually have behind the scenes kind of two corporations in a different unique structure, which we've kind of run by CPAO, and we have some other kind of firms and accounting firm owners that we speak to about the situation. So we do actually break it up a little bit because you're absolutely right. In Ontario specifically, you do need a CPA-owned professional corporation in order to employ CPAs.
Okay. So majority or entirely?
I believe it's entirely. So with a professional corporation, it can only be kind of 100% shareholder by that person who is licensed. So we have I'll call it unique, whether it's terribly unique or not. I'll leave that to the audience. But we've got a true corporate kind of setup where any work like compilation engagements or anything in regards to kind of CPA, whoever might be employed, whether it's a student or a kind of official certified CPA, that will all just be under the separate corporation.
I got you. Okay. When you came on with your dad in 2010, did you come in as a partner or did you come in as an employee? Like, talk to me about that transition of the ownership of the company then.
Yeah,
or these two companies.
Absolutely. So it's actually pretty recent. So going back all the way, I just started as a simple subcontractor. I wasn't even an official employee. Granted, I was a full-time subcontractor. That didn't last very long. Moved over to official employment, where I was getting taxes, CPP, and all that fun stuff taken off my paycheck within the year. That was a standard kind of 9 to 5. Lived in the basement. Went upstairs to the living room to get to work there. So then I was the first full-time employee from that perspective. Grew by leaps and bounds. Everything at that point is just a sole proprietorship. I believe he incorporated maybe 2012. And so moved from sole proprietorship over to the incorporation. So we've actually been working on the succession plan for, I would say, the last 3 years.
Okay.
And ultimately, it was rather interesting because neither of us really cared. We were not necessarily rushing for me to take it over, for him to sell it. Both of us were just almost too polite in regards to, well, I want you to save taxes. Well, I don't want you to pay too much. Well, I want this and I want that. And it actually, frankly, hurt us more than helped us because we'd speak to some serious high-level tax specialists, whether it's insurance, whether it's partnership agreements, these kinds of things. And we would get more questions than we would answers, wherein, okay, well, what do you guys really want? We're like, whatever's most kind of tax efficient. And so for better or worse, the rules were changing quite considerably January 1st, 2024. So the fuel to the fire really happened, I would say, mid-2023. And so once we realized those rules were kind of official and set in stone, and that Ross would potentially be paying hundreds of thousands of dollars more in taxes with this transition, again, both of us not necessarily rushing. We made the determination that, you know what, let's kind of batten this down. Let's get everything straightened out for December 31st, 2023. So we did a lot of kind of estate freezes. We purified the corporation, did everything we needed to from an investment perspective to qualify for what's called the LCGD in Canada. Whereas you can effectively, to oversimplify it, sell your business for up to, let's say, $1 million completely tax-free if it's a qualifying corporation. And so that's what I mean when I say purify it, is to make sure that this was able to be a corporation that could be sold to me from Ross for considerable tax savings to qualify for that LCGD. And so behind the scenes, to get into the nitty gritty, my mom, Susan, she owned 49% of it. Ross owned 51% of it for tax planning reasons. So they were able to account for 2 times the LCGDs. So they were able to sell it, that first $2 million, completely tax-free. And so above and beyond that, he had to pay taxes on that, or will have to pay taxes on that. But we made the decision to basically, you know what, let's get this done before these rules come into place. And he's going to have to pay considerably more tax on what's called the AMT, alternate minimum tax. So they really, I don't want to say forced our hands, but they were like, I would do it now. And we're like, okay, sounds good. We've been waiting for somebody to kind of force our hands a little bit and making that determination. And overpaying in taxes is one reason to kind of push that, right? It was inevitable ultimately. So it's like, okay, let's do it. Let's make it happen. And so to be very clear, he's absolutely still very much in the business. He's still working on the business full time. While he's handed over the reins in regards to the behind the scenes from a actual ownership perspective, as well as, and I would say this to him as well, anything I say, I would certainly say to his face, but I've been making all of the decisions for the business, I would say for the better part of 6 to 7 years now. And so he trusts me, right? We've steered it in the right direction for the last however many years. And I mean, we often say we pick our battles, and the battles are very, very few and far in between. And we're very fortunate for that, because you can't necessarily say that that's going to be the case for anybody and everybody that's working with family, right? So we're dope.
Okay. That's interesting to hear. So you had no ownership, and then you went to 100% ownership. That one execution
overnight. Absolutely. Okay. A lot of work that went into it behind the scenes, but officially, yes, absolutely. That's kind of how it worked. It's not like, and you know what, we discussed, hey, do I get 10%, the 25%? Do we drip this out? And both of us had made the official determination, whatever was most tax efficient for him, right? And this really was the most tax efficient way to get it done. So that really kind of forced our hands. And well, he did understandably have a piece of him that was like, I really kind of expected to drip this to you a little more than 100% overnight. The emotional aspect of that is effectively like, okay, is it? Okay, it's yours now, I guess. But again, that's more of a formality as far as both of us are concerned. It's not like all of a sudden I puffed my chest and I was like, hey, I own this place.
You're fired
January
1st.
Exactly. So it's like, it's all the exact same thing. It's not like overnight on December 31st, 2023, I said, never mind, here's the changes I'm making. It was just natural. It's more of a formality from tax efficiency perspective.
Okay. That's great to hear. I mean, yeah, that is one of the issues. You talk about the murkiness in the succession plan, the assumptions, it'll happen eventually when it happens. It didn't sound like there was any of that in his mind of the leadership of the company. You said 6 or 7 years ago, you started to make these calls and he let you, and it wasn't like, well, you're running the company, but I really own it, so we're going to stop.
Yeah.
Is that right?
That is exactly right. Understandably, he's trusted me. I've kind of proved myself to him, for lack of a better term. And all the decisions we have made has kind of certainly propelled us up to the successful business that we're at today, and certainly where we expect to be. So yeah, he's trusted me. He's trusted my decisions. There's been times he's like, "Are you sure?" And as long as I'm confident, whatever I'm bringing to his attention or making a decision on, he says, "Okay, sounds good. I trust you," and haven't steered him wrong, knock on wood, so far.
Gotcha. Okay, cool. Yeah, a lot of books on succession planning and everything, just experience. They draw the 3 like Venn diagram circles of, you've got a relationship as a owner versus non-owner. You've got a relationship as a employee versus, both of you guys are employees in the company. And you've got a relationship as dad and son. And you've got to decide, where do we want clarity in this Venn diagram, and where we, there was clarity on the ownership or on the employee side, it sounded like. your chief operating officer, you make the decisions that guide us in this direction, that executes on this, even though the ownership yet hadn't filled in. So that's clarity needs to be in there somewhere.
It does.
It just necessarily wasn't on the ownership side for you guys yet.
Exactly. Yeah, no, and it's like I said, it was from a trust standpoint. He's really trusted me, and I've certainly trusted him. And I mean, God bless him. He's got me to where I am today. And yeah, it couldn't have worked out better for the both of us, quite frankly.
Okay. If I can ask, like, coming up with a valuation of a company that you've been in for 15 years, how did that go about? Because I'm assuming it's a hefty buyout, just on the estate planning side that you've talked about. So, I mean, talk through that process for me.
So that was a very, very, very interesting one. And especially speaking of us being, I'll say, arguably too polite about everything. So, I mean, we ultimately did end up getting an official formal business valuation from a third party. And we went very close to where that ended up. A lot of it was kind of tax efficiencies. So, okay, let's reduce it a little bit because of X, Y, Z. And so it was interesting, right? Because I can sit here all day and he can sit here all day and say, well, I've brought arguably 50% to this business, regardless of whatever the actual corporate share structure says, right? And so the question becomes, well, even if that's the reality, does CRA care? And the short answer is no. I'm just a very good, important, key man employee, right? And so we ended up coming to a place where it was fair on both sides, as well as effectively a handshake agreement that says, you know what, I'll take care of him as kind of time goes on, as he rides into the sunset doing whatever he wants ultimately. And so it ended up being very fair. And most importantly, I think it would have changed a little bit if I had to ultimately pay him out of pocket, my personal pocket, where we were able to officially kind of structure this so he was able to be paid out from the corporation with kind of how we set up the share structure, or the corporate structure, with different holdcos, etc. So that made it, I'll say, less of a concern for me to pay him X amount because of whatever had kind of ultimately transpired behind the scenes and what I brought to the table. So we wanted to make sure that it was all fair. But you're right, that before we got some kind of serious advice from some super high level tax specialists far smarter than us, we were getting into the nitty gritty of effectively, okay, how much did I bring to the table? How do you quantify that? How do you determine what has Mike done for this business? And you could even sit here and say, well, we would be nowhere without Ross starting this business that had $100,000. You could argue the flip side that said, well, it would have potentially crashed and burned had I not brought all these operations, hired all these people, made all these decisions, pivoted over to this way, etc. So it is an interesting conversation that we both landed on. I don't know. we didn't necessarily know. And call it 50-50, and that's where we landed for the sake of simplicity. That actually had no bearings on where we ended up from the valuation or how that kind of ended up transpiring. But we put a lot of focus on that. I'll say unnecessarily, with the benefit of hindsight now, just to basically make that decision, make that determination. But it really ended up what matters from a CRA perspective and what ends up kind of being fair. Because knock on wood, but should CRA end up asking any questions, you've obviously got to justify the valuations, got to justify this. And I was never a shareholder on paper. So,
yeah, gotcha. Okay. Yeah, there's a big fear of if I exit my business, sell it to a consolidator, sell it to an outsider, then I'll get a payday. If I do it internally, I won't get paid. It's just going to transfer, way under market value. But actually, the studies show that the premium is only about 10 to 15% on selling to an outsider versus an insider. So it is interesting to see you guys did a legal official valuation of the business to come up with what that fair looked like and, satisfy the taxing authorities. So
exactly. And we figured that was the simplest bet. We got good relationships with business valuators anyways, so it's not like it cost us $10,000 or anything like that. We were able to get it done for an appropriate price. And it just seemed fair, right? I mean, even if we argue this or I argue that, it's just, what, let's land on a spot that third party kind of says and work with that from a tax efficiency standpoint.
Great. How many years for the buyout in order for the cash flow from the company?
5 years.
Okay.
Yeah.
Great.
we're aiming in the way that we're trending right now. I'd like to make that happen considerably sooner, just to keep things clean. So we're pushing out as much as we can to him as kind of quick as we can, while keeping on the radar that we are looking at some acquisitions. And so cash is king, and he's a big part of that, obviously, as well in that regard too. So we're doing what we can to kind of balance that, pay it out over 5 years. I ideally like to say at the maximum, but TBD, depends how things unfold.
All right. Shifting away from that just a little bit. So you guys are 30 people right now, all within not even 10 years, about 7 years, you guys have gone from 2 to 30. And I know you work with other people in your family. So you said your mother was a part owner. Talk about that. I mean, it's not the same as they worked there and then dad brought son in. You guys were there together and then you guys hired people. But just talk about the decision to make it more of a family company.
Absolutely. So my mom, Sue, and they're still shocked at how I'm able to turn that on and off and quickly call them Ross or Sue or mom or dad. But so Sue, she had always worked for a mid-sized accounting firm in Toronto. And so she'd done that for about 35 years, kind of administration, office management type stuff. So it was always really in the back of our minds that she's at some point certainly going to come on board. And so we had, I think at the point where we made that determination was probably about 5 employees in. So we had a lower level admin. She was, quite frankly, too expensive for us. It didn't make sense. So he's going to lose the salary income, but he's all of a sudden going to pay her. So we had to kind of weigh those pros and cons and whatever makes most logical sense. So it was probably about, 5 years ago or so, maybe, where we officially brought her on board. And there had been somebody else that she'd worked with for the past 25 years, who's our kind of head senior accountant now, that he said, if Sue leaves this firm, I'm leaving this firm. So not only were we losing, I'll say, Sue's salary or my mom's salary in the family at that point, and then paying her, we had to pay George, who was his name, at that time too. Now, half jokingly, he obviously didn't say, you have to pay me, I got to jump on board, but we wanted him and we needed him. So we made the determination, let's bring Sue on, let's bring George on, let's kind of take it to the next level. And so just given her experience, it was a no-brainer that at some point she was obviously going to come and end up working for us. Obviously, it was a different experience and kind of continues to be in the best kind of way, having her son really be her boss and tell her what to do. And so it's not like that. Like I said, I'm able to turn it on. I'm able to turn it off. We're very, very good, everybody in the firm, at being able to kind of separate that personal from the business. And I speak to everybody as polite as I possibly can, whether you're family or not, right? That really doesn't matter to me at the end of the day. I want to treat everybody with respect and treat everybody the same. But then as that kind of unfolded, so now you've got my dad, my mom, me. We then brought on board my uncle, who is one of our project managers, and he's kind of been in the business space his whole life, doing kind of a whole lot of sales type stuff too. So he's project manager / sales for us currently, and he's fantastic too. And then I think about 3 years ago, we brought on my sister-in-law as well. And so she is one of our absolute rock star admins too, with a legal background. So her attention to detail is kind of unparalleled. Which is fantastic. So we got my dad, my mom, my uncle, my sister-in-law, and I think I've taken everybody I possibly can from the family tree at this point.
This is your wife's sister? Or
this is my wife's sister. Yep, absolutely. Okay. So I made the very, very conscious decision to hire her as a limited contractor in the beginning to kind of test the waters. How are you going to do it tax time? And she excelled. She absolutely killed it. And I said, great, we've got a full-time spot for you here forever should you want to come on board. Because there'd be nothing worse than having to let go a family member, never mind my wife's sister at that point. So I was a little hesitant in the beginning, but I saw her work and she'd get done some kind of other limited stuff for me separately. So she's an absolute rock star. We're thankful to have all of these people for sure.
Gotcha. Okay. How do you guys do with turning that off at family functions? I mean, is your wife just drowning in?
So
everybody's talking business except for me.
It's rather interesting, and we have very consciously try and turn it off as best we possibly can, right? Because if you see my mom and my dad and my uncle and me and just our family in a room, it's like, how do we not talk about this burning client or whatever situation is going on? But we know nobody wants to hear about that. Nobody cares about YBL. Nobody cares about what we're doing. Nobody cares about this, that. And so we've been able to kind of taper it down quite a bit as time's gone on, and try and keep it kind of business and keep it personal. Obviously, it slips out every once in a while, but it'd be interesting. And then you got other family functions where my sister-in-law is being asked by her uncle, "Hey, how's your job going?" And I'm kind of right beside her, and she's like, "Good, good, good." My boss is right here. But no,
she's using Morse code, blinking.
Exactly.
Ask me in 5 minutes.
No, nobody's, as far as I'm aware, nobody's got to lie about how much they like or don't like their job. So I mean, it's all open conversations. Everything's going very well. Everybody's happy as far as they tell me, anyways, which is important, right?
So you guys have a structure now, obviously, that can scale, and you're looking to almost double the number of employees that you have. What does it look like to be a non-professional leading a professional services firm as an operating officer? I mean, what's your main focus every day?
Operations, kind of solely, right? As you can shockingly imagine. We're actually in the midst of a complete kind of org structure overhaul. So we're thinking about going down a couple different paths of kind of shaking that up a little bit. Whether you get your traditional tax manager or you're going kind of the pod structure route with the kind of niche verticals within internally. So we're actually flirting with a couple opportunities and going to make some kind of difficult decisions within the coming months to make sure that we are really prepared to scale. I mean, we've scaled tremendously. We were able to ever so politely kind of take advantage of the opportunity that the last few years have presented us from a remote perspective. And that's really kind of pushed us into this next level. And so now the question is, okay, we've made it here. Let's pump the brakes ever so slightly. Let's get back to that foundation, those fundamentals, and make sure we're ready for that kind of next step, whether that's acquisition, multiple acquisitions, whether it's just natural growth, focusing on org structure and client experience. But focusing on org structure is absolutely the highest priority of the day. And how does that kind of get set up for the future kind of growth path is very important, where I'm focusing a lot of my time, a lot of my efforts, because I am fortunate enough that I have been able to delegate, I would say, about 95% of my client-facing work. So that's gone very, very well in that regard, which I think, quite frankly, being in it now is absolutely mandatory. I mean, even the employees that have delegated all that work to were like, how did you do this? How did you do this plus this plus this plus this? And the short answer is, I have no idea. I just made it work. But I really want to work myself out of a job to the extent that there's other stuff I should be and can be focusing on and kind of moving the needle in a different way. So it would have just been impossible without me kind of delegating all that work and looking for the most appropriate path to success and certainly scaling. And I don't just want to scale or grow for the sake of scaling and growing. I want it to be very intentional. You could just buy a firm, you could do this, you could do that, whatever you want to do, but that's not what I'm looking to do. I want it to be very selective and very intentional, and spend a lot of time being able to flesh that out.
Yeah. I mean, anybody could scale revenue and make 4 or 5% off of it. But it sounds like by focusing on who that top line revenue is going to be, you guys are looking for higher profitability from that. Up to this point, since 2010, have you guys been very selective with types of clients or a niche or focus, anything like that?
Not currently. And I know there's a lot of talk about kind of niche in the space. And so that's not really where we're at. Well, we are selective to an extent to other metrics, such as kind of responsiveness, good people, people that can afford to pay the bills. We haven't actually kind of narrowed down our niche in regards to kind of who we'll work with. We've certainly got more selective, like easy example, we're exclusive to QuickBooks Online. So we won't work with any of the systems. If you're willing to convert, that's fantastic. But we are actually in the midst of kind of rebranding. And now that we've kind of officially made it YBL as opposed to Your Bottom Line, that has narrowed our focus a little bit more in regards to the industries we're working with. So, well, yes, from a marketing perspective, we're working with kind of real estate and ancillary, whether that's agents, brokers, real estate investors, and healthcare, whether it's massage, chiro, physio, and trades. We will work with people outside of that scope, but from a marketing perspective, that's kind of what we're looking at. So one of the things, like I mentioned before, we're thinking about flirting with the possibility of doing internal pods with kind of niche verticals. So that's something we're playing with too.
I gotcha. But up until now, it's been very much the traditional, well, we've got this CPA over here. He likes working with this type of business. And so these are his clients that he's kind of brought in. So
capacity, resources, all that fun stuff. Who's got the bandwidth?
Yep. You did say before the call, and you're not the first firm I've interviewed, but you're using PF also for your rebranding here, going through that process this year. We went through the same last year, and it caused us to severely niche down as well. How have those discussions been going with Dad? So, versus just you saying, well, this is the company we're going to run for the future. I know that's one of the struggles is 20-year relationships that don't fit into that niche. How's that going?
So better than I expected, quite frankly. We ran kind of all of mine and Ross's conversations are always trust and faith and based on picking your battles and such, right? So while I am the one actively working with PF, which, by the way, the most fantastic team I've ever worked with, worth every penny. I'd pay them more, but don't tell them that. when you convert it from pounds over to Canadian, different story. But ultimately, they're a fantastic team to work with, and he's really, more than ever, put a lot of trust and faith in me. I would say more than anything in the last 14 years with regards to this kind of big rebranding, the overhaul, our missions, our values, our website, our logo, our ideal clientele. Every piece of that, he's really allowed me to take control of that. And while, yes, I'll be on the lovely calls with the great team at PF discussing, hey, what about this? What about this? What about that? And I'll take it back and kind of relay it to him. And he'll have kind of slight tweaks or slight suggestions, but he says, only if you kind of think so. And so it's worked out well. While he absolutely has input and he absolutely has a voice, he doesn't use it quite often in the most respectful kind of way. And when he does, I'm very receptive to it, right? By all means, I don't want him to feel like he's been pushed out of his own company on paper or not in a million years. He's a very valued part of the team, quite frankly. So I'm not looking to just push aside that experience and that value and the knowledge that he certainly brings to the table.
Yeah, for me, the value from PF was just getting me and my partner both on the same page.
Yeah.
Because we both had different ideas about what we wanted this company to look like. But those sessions that we spent with them helped us to put something down and commit to it. So,
that's what I really love. Sorry to cut you off there, Barrett, but that's one of the things that I really loved about PF was they won't just do your website. They won't just do your logo. They need to deeply understand who you are, who your ideal client is, and every different thought about them, their fears, their strengths, these kinds of things. Just really digging into my brain in the best kind of way. I said it's kind of like therapy, right? They're just extracting all this information out of me. And that's what I love about it, right? Because you could do a website, you could do a logo, but that doesn't necessarily tailor to the most appropriate audience. And so same thing as you. It really helped us kind of narrow down who those, not niches, but let's say the real estate, the healthcare, and the trades. That alone, obviously I worked with Ross on that, what made most sense, who's our ideal client. So yeah, it really forced our hands in the best kind of way to make some difficult kind of determinations or conversations. And it's not necessarily like we're going on a mass firing spree if you're not in those kind of niches. But we will absolutely be a lot more selective. And if a current client doesn't necessarily understand it, then that's okay. And I think that's going to be one of the favorite parts about this rebrand is that I think it's really going to show who we are, not only to new potential clients, but to current clients, right? Well, they've seen this natural technology progression in the background. And of course, we've changed our website, done this, done that. I think with the real kind of big overhaul, that's going to be that, oh, that is who they are. This is what they stand for. This is what's going on behind the scenes. And if that doesn't work for everybody, that's okay. That's fine, right?
Yeah, help them see that there's a why or a bigger picture behind it. You guys aren't just changing your website just to change it.
Exactly.
There's a purpose that it's all leading towards.
Exactly. So, yeah, you got it.
Okay. Yeah, and that's, going, a lot of branding agencies out there, it'll be like, we need a website, give us a website, and they'll give you a website. And then on the flip side, other ones will be like, well, this is who we think you should be. But just the process that you go through with PF is, who are you? not who do we as a branding agency think you should be in order to appeal to, younger or more tech savvy or whatever clients, but it is getting down to what your core values are. So,
yeah. And I respect that. I respect the time they've spent and what they've extracted out of me. And like I said, force my hand in the best kind of way to make these decisions and make sure that I'm kind of getting this stuff out of my head, out of my mind, and putting it on paper. Right?
Mm-hmm. Did you go through that process entirely by yourself then?
I mean, I was the only point of contact for PF. I was the only one on the Zoom calls, on the everything like that. But behind the scenes, I was absolutely working with Ross and working with Ashley, who's our operations manager, who was my right hand in the business, other than Ross, call it my left hand. And she's been instrumental in the success of our business and helping from an operation perspective as well, too.
So what does the future hold besides scaling employees for you guys and finishing the rebrand this year?
I would say just really honing in on, like I said, the org structure, really honing in on the client experience. Client experience is extremely important to me for understandable, obvious reasons. You never want somebody coming in the door saying, hey, you know what, I thought you were going to do this, I thought you were going to do that. I want it to be clear as day. And I think with the rebrand, we've really kind of honed in on that and made that happen as well. And so other than, let's say, client experience, org structure, scaling, those kinds of things, internally, we really want to just cultivate the best possible team we can. And that's one of the reasons we've kind of gone and pushed to being as remote as we possibly can, because it's difficult for me to wrap my head around making the decision to hire somebody, let's say 10% as qualified as somebody who's 100% rock star, who's in a different province or in a different state or in a different country, just because they're down the road in the proximity. Right. So that's really what kind of forced my hand into making the determination. You know what? Let's do this as remote as we possibly can. Let's just sourcing out the best talent and taking care of those people. Right. You find the good people, you can attract the good people, but you got to be able to retain them and take care of them. And so whether that's financial, monetary, work-life balance, benefits, whatever that is, the whole kind of package, we're massive on feedback and transparency. And flexibility and communication, for that matter, too, right? We take feedback very seriously, internally and externally. And so we're very regularly crowdsourcing from our clients, from our team. Hey, what about this? What about that? And everybody feels that their voice is very heard here. And I feel very confident saying that. And that's very important to me. I want everybody to be a big part of the team. I want to be able to take care of our team. So I would say just keep kind of refining that and honing in on that is very important to me as well.
Gotcha. Okay. Were you guys fully remote prior to COVID?
So
I
not
know you
at
had
all.
a building at some point, but did that?
Yeah. So we actually just moved into our largest office, our current office, November 2019. So terrible timing, understandably. But you know what? The rate was actually cheaper than the spot we were at that was smaller before. So it worked out okay. And so that spot can currently hold 6, 7, 8, about 13 people. But I would say we probably got 3 people that work there full time, 4 or 5 people today. Yep.
Okay.
Yep. 4 or 5 people, myself included, that are hybrid. And then the rest, what's that leave? Kind of 22 that are all over, majority Canada.
Would never come to the office.
Would never come to the office. Well, I shouldn't say never, because the majority of our team, I'd say about 20 of our 30 team members are extended GTA, so around Toronto by an hour or two. So we actually just got, I think it was about 14 of us together at the Toronto QuickBooks Connect conference. So I love, if somebody could be close-ish and we can see them once a year or anything like that, then all the better. So that doesn't make the decision for us, but yes, now from a client-facing perspective through this new rebrand, we're remote only. Whether we actually have that office or not, or a few legacy side clients come in or not, is really not a big deal to us. It's as much for us as it is clients. So we're completely remote from a new client perspective and limiting as much as we possibly can from, I'll say, a culling perspective for current clients to try and say, hey, let's do everything online as best we can. And so that's one of the kind of silver linings that kind of came from everything that transpired, is people did realize, hey, maybe I can just Zoom my accountant, or maybe I can send my documents this way through the portal or whatever that might be.
So a hybrid environment. I mean, we're the same. We've got 15 on staff, and any given day, 4 or 5 of us are in the office, but the majority work from home 4 days out of the week. How do you guys at 30, if I could ask a personal non-succession related question, how do you guys as 30 people build culture in an online environment other than like a QuickBooks Connect conference that happens to be in your hometown?
So that's a great question. And we actually continue to refine that and determine what does that really look like, right? What do events look like? Is it in person? Is it hybrid? Is it something that we're just doing an online game on Zoom or what have you? So we have a couple little things that we're doing to kind of keep the culture together. And especially with new people, we're very intentionally kind of having them meet with different people virtually to try and get to know the team, understand who we are. Because we're never going to be the suit and tie accountants, as you can see. That's not kind of who we want to be. We want to be much more approachable. So we do very regularly, and it's kind of review season for us right now, where we're picking our employees' brains. Hey, what do you think of this? What do you think of that? And it's interesting, right? Because an easy way in a remote world is to say, well, just do something online, whether that's, like I said, to oversimplify it, some game on Zoom or something like that. But then the question becomes, number one, is that helping or hurting? And number two, do people even want to do that, right? Are you forcing them either during work hours to get out of the zone or outside of work hours and then taking that personal time away from them? And the majority of people say, you know what, I don't really care. It's not really doing anything for me. And so we're still trying to find a way to keep that culture. And I think we do a fantastic job. There's always room for improvement in anything we do. But keeping it friendly, keeping it casual, whether it's just different conversations on Teams, water cooler channel, you're talking about your dogs or your kids or whatever that might be. But we're still refining what that kind of culture looks like. So in-person events as much as we possibly can. We do have some online activities and things that we're doing. And whether that's some sort of kind of wellness program or other stuff that we're implementing, I think it's helping, and I think people really appreciate that. But always open to suggestions, that's for sure.
Have you guys ever done any like team retreat, like 100% attendance or anything like that?
Not yet. We're actually discussing that internally right now because we do feel like we get so much benefit from, let's say, QuickBooks Connect or any conference that we're going to. And to have that felt by absolutely everybody, not just the people who can drive there as opposed to fly there, I think is extremely important. So I think that's something that's definitely going to be on the horizon for us for sure.
Gotcha. Yeah, we just did our first actually offsite last June. After having gone through some of the initial stuff with PF, we had enough to say, this is who we are. These are our core values. These are our target client. We didn't have the brand yet. We didn't have the website, but we did that. And we committed to doing that once every 3 years just to check in on our 3-year goals and everything like that.
I love that.
Highly recommended it. And, you know, for the people who are here locally, we left too. We went to Virginia, 3 hours away from here just so that there wouldn't be any temptation to say, come see us in the office and I'm going to be over there having coffee, but then run back here and check email and do local stuff. So highly recommend it.
I love that. No, and I've seen more and more on wherever you're looking, LinkedIn, Tax, Twitter, whatever that might be, more and more people are doing retreats like that. And so it certainly piqued my curiosity that much more. And everybody, whatever they're saying, whether it costs $5,000 or $100,000 for these retreats, every single person I've seen and heard of, whatever they're paying, they've all said worth every single penny. It's just palpable, the feeling and the difference. Even if you're just talking on Teams or Slack after that, they said just the tone changes. It completely changes. Everybody's re-energized and gets so much from that FaceTime. So definitely on the radar for us for sure. We
went to the hills, the mountains. We actually rented an entire cabin at a campsite for us. The host site took care of meals and everything like that. But so that we all had our separate rooms, but it wasn't like a hotel where you might be on the 11th floor, there on the 3rd floor. It's like scatter kind of thing. So it was great.
That. I love
we
that.
Actually, most of us walked from the cabin to the dining hall, like a half mile for each meal. And so we got lots of talking time and stuff like that. So
that's perfect. That's great.
You guys have gone through a lot of changes. There's got to have been some point where you and Ross butted heads on something that caused you to be like, this isn't going to work. You think of that story. I want to hear that story because so far from our conversation, everything has gone exactly as perfect, a little bit murky, but gone off without a hitch. And Ross sounds like a great leader to follow in the footsteps of, but there's got to be something. Come on.
Big shoes to fill. You're absolutely right. And that was one of the biggest kind of, I'll say, hurdles for us to get over. I'm not sidelining your question, but one of the biggest hurdles to get over was, as it was just Ross and Mike, or even just Ross with this guy who's helping doing bookkeeping or whatever in the beginning, at his house, at his kitchen table, to change the mindset of all of those clients. This isn't just Ross, right? This is your bottom line, or this is YBL, right? To be able to change that was a rather difficult, not difficult, but that was one of the bigger hurdles, to understand that we are growing and you have to understand that and respect that, or it's not necessarily going to work. You're not getting Ross 100% of the time, or even Mike for that matter. So that was a big hurdle to kind of move out of the office in that regard. But quickly kind of segues into, I would say, nothing has ever been a hostile argument between the two of us.
Sure.
But I'm always the one that's wanting to move further, faster, harder. And so if you want to say one of our most difficult arguments or disagreements, however you want to label it, it would be those kinds of things, right? Like, do we need our first employee? Do we need to move out of the living room? And my mom would say, yes, get out of here. I want my house back.
That was 2-1 in that discussion.
Exactly. So those kinds of hurdles would, I would say, be the most difficult conversations. And every time, very, very fortunately, he's been like, you were right? And so he's, how do I say it, frugal. And so
he's an accountant.
He's an accountant. He sure is. He bleeds accounting. But ultimately, he would not have moved nearly as fast as we did if it weren't for me saying, no, we have to do this. We have to take that next step. We have to hire an admin. Number one, because I'm just doing too much work. But number two, it's just, we can't unlock this kind of next phase without actually bringing these people on board. And they're big decisions, right? I'm not going to sugarcoat and pretend like I had everything figured out. It's a very big decision, hiring your quote-unquote first employee outside of your son, and your first office outside of the home. Like, those are very difficult decisions. But I just knew that we would be able to take it to that next step. I'm not the type that I want my team to theoretically be at 200% capacity before we have to be able to hire somebody. We're fortunate and blessed enough for me to be able to say, we're probably going to get some new clients, and here's how we can kind of forecast and project that, and let's work backwards from there and see what we might need. And that really flows into that kind of work structure conversation. So I would say, if you want to think of kind of the hardest conversations, those would probably be them. But even still, it's more of him being like, are you sure? And me being like, yes, I'm confident. He'll say, all right, fine.
And then you go away and be like, I'm trying to be confident.
There's really been no angry conversations. I mean, even if you talk about my wage or compensation, I was always fortunate, always appreciative. So it's not like there were ever any large disagreements with any of those, I'll say, more higher level conversations or higher level decisions to be made. There's a lot of trust, and I give all the kudos in the world to him for trusting me this whole way, for sure.
Just one more question before we get into the lightning round. What do you have in the back of your mind for your own plans for succession? I know it's a long way down the road, but is it, at this point, do you guys have a leadership path? Do you have any kind of things in the back of your head that you need to focus on over the next 20, 25 years?
I mean, long term, in a magical, ideal world, my son or my daughter. My son's 5. My daughter literally just turned 1, so this might be a couple of years out. But prior to that, I would say, while I don't necessarily have any succession plans for myself, that is very, very important to me. We're only on this earth for a short time, so we want to make a difference, certainly while we're here, and you want to hope for the best, prepare for the worst. So org structure, cultivating a fantastic team, I think all that kind of quickly and easily just shifts into that next phase of the conversation of what does that end up looking like, whether Ross ends up kind of stepping aside in 2 years, 5 years, 10 years, whatever that ends up looking like. This is fun to him. This is not work to him at all. He's going to be here as long as I'll have him. I always tell him before I got to kick him out of his own business. Ultimately, until he's a liability, let's say. But no, I mean, right now I'm not necessarily thinking of that, but partnership is certainly going to be something that will end up being inevitable. And so I've certainly wrapped my mind around that as best I possibly can. While I don't necessarily need it right now, who knows, with future acquisitions, have in store. Who knows what my current team might be capable of in that regard, who might move up, who might make most sense. But for now, I'm okay with Ross or even myself kind of doing it how I am. But I know that it will be inevitable at some point, like I said, whether that's a partner in the interim or a full kind of succession plan. But if you're looking for my dream answer, that's my son or my daughter at some point.
I'd like to end my shows with a lightning round. This is just a series of questions with a sentence, 1.5 sentences, just no context. Just get to know my guests a little bit more here at the end. Let us know the person behind the business owner. So you ready for the lightning round?
Let's do it.
All right. Coffee or tea, and how do you like it?
Coffee, 100% of the time. I've maybe had 5 teas in my life. 1 cream, no sugar.
Okay. All right. Pie or cake, and is there a specific kind?
Cheesecake, all day long. All right. Although I did have the best cherry pie I've ever had in Amsterdam on my honeymoon.
Okay. Plain cheesecake or like a marbled one? What do you like?
Cherry, I'd say cherry.
Cherry cheesecake.
Yep.
Okay.
Yep.
What is a common belief among entrepreneurs or among your clients that you want to challenge?
I'm an optimist, not a pessimist, but a lot of these individuals will come to me and say, I'm quitting my job. I hate my boss. I'm working too many hours. I'm going to start my own business, whatever that might be. It's going to be easier. I say, I hate to break it to you. If all goes right, you're probably working 80 hours a week and everything's your fault. So just be aware, be careful, and understand what you're really getting into, because business ownership and entrepreneurship is not for everybody. And there's no right path, right?
Couldn't have put it better myself. What's your favorite holiday and why?
I got to say Christmas. You see the most family around Christmas. My wife is obsessed with Christmas. She's already bought presents by July 1st, half Christmas for her anyways.
Do you consider yourself a morning person or a night person? And do you have a routine?
Neither. I don't stay up too terribly late. Honestly, I wake up usually very early, kind of 4 a.m. Before the kids are awake.
Night people would call that a morning person.
I would, yeah. So I do it because I have to, let's say, because I'm so tired at night. I've got myself into this structure. So I'll wake up, do my best, do a cold plunge, off to the gym, do some cardio. Kids are awake as best I possibly can and start the day right. I love that time in the morning. So, yeah, so I'll call myself a morning person. I forced it on myself, though. It's not like I love it. I wake up and I'm like, I have to do this. Nobody's awake.
I'd love to be a night person, but I can't stay asleep later than 10:30. So
that's it. That's absolutely it.
Yeah, totally. Exactly. What is one thing that you would want your successor to remember you for?
I would want them to say that he tried and he cared about the people around him and did everything he could to take care of them. And he gave it his all, and ideally he accomplished the goals that he set out for himself.
Where are you finding creativity right now?
We kind of already talked about it, but I'd say PF. I mean, those people are fantastic. I've read their book, Accountant Marketer. I don't mean for all of this to be a plug for PF, but if it is, so be it. But I would say
that means Karen's going to share our podcast.
No, exactly. There you go. Absolutely, Karen, please share.
Plug away.
I mean, they are absolutely fantastic. Creative as a hell. And I love everybody on the team. They're fantastic. But I'd say communities as well, like Tax Twitter, different communities like Realize with Jason Stats. There are tons of creative accounts out there for sure.
And last question, what do you guys have coming up at YBL this year that's got you really excited?
Not to plug her one more time, but the rebrand, the new website, the new logo, new ideal clients, new clearer values. Insanely excited about that. They've just taken it to the next level. So the rebrand was obviously massive for us and very exciting times for sure.
Is the new website live already, or what's the date? Okay.
Yep, absolutely.
All right. And so where can people find out more about you guys, Mike?
They can find us on social media, anywhere you want, kind of LinkedIn, Instagram, Facebook, all that fun stuff, or just right at our website, yourbottomline.ca. So yeah, all the usual suspects, and appreciate you, Barrett, for having me on today. It's been a pleasure, my friend.
It has been a pleasure. Thank you so much, Mike.